Hello everyone, this is TobeTada with another video of crypto trading. Thanks for checking by, and let's dive right in. So for today's video's topic, I've decided to talk a little about action and reaction as seen in the movement of Bitcoin, and also look at what's been going on there. Basically, in the last video we talked about this correction here that was ongoing, and it went down to about actually about 4,860, something like that, and basically the average hovered a little bit higher up here, and as you can see I drew in some more trend lines here, and basically the price has been moving again fairly linearly within these boundaries upward, now reaching about 5,230, and you can see that in some videos ago I drew in the rough projection that I was thinking where the price was going to go, and the first correction was very successful, and here we can still see what is going to happen. I'm still thinking that we're going to see a correction going back down to about 4,600. And the reason behind this is, if we're looking basically at the bigger picture here, especially at the time when Bitcoin was in a very bullish phase here, and if we look at basically these individual waves here, you can see why I think this is going to be the case, and you can basically see it here. For example, when we had this upward movement here, we had a correction and an even bigger correction and an even bigger reaction going actually all the way down here. Sorry for the drawing. And then basically going upward, and again a very large correction, almost going back down here again before going back up, and then continuing just basically upwards here. And as you can see with my poor drawing here, it still shows that we basically have, if you will, so to speak, here, when we have an upward movement, we have a strong downward movement, and again an upward movement and a strong downward movement. This didn't really go up and stayed here basically and went up again, something like that. We had actually these very strong corrections going back down here, as you can see. And you can also point this out in other movements here, for example. We had basically a upward movement and then a fairly strong correction back down here again. And this is also visible if we go further up here. This is very, very visible here, of course. When you look at this very large gain here and a very, very large loss here, actually going back down, further back down from where here where it started. So that basically shows you that these movements, of course, the price movements are basically waves, and that the general direction here, this upward movement, is basically divided by these fairly strong corrections here. And so that is all the reasoning behind why I'm saying that we're going to have a correction, and I think that's still holding true, because we've been basically in a very strong upward movement here going up here, and we just had the correction going back down here, and I think we're still going to see a stronger correction going back down here before, in the long term, we're probably in an upward phase, at least a sideways to upward phase here, I believe. And basically for today's topic, I wanted to talk about these movements and what I'd call action and reaction. And I think it's fairly obvious. If you look at the charts here, you can see the, if you would want to call the green movement, the upward movement in action, and the green movement or the price going downward would be the reaction. You can see that every action is followed by a reaction, and this reaction in a bull market going upward is of course normally not as strong as the action, and this depends a little bit on what scale you're looking at. So we're now at the 4-hour scale, and so basically we're looking at these movements here that occur within the month and weeks, and you can see that basically again here we have an action going upward and a reaction going back down to an action going upward, a reaction. And what that means is also that if you have a strong action, you're not going to see it, I mean relatively speaking, a continuation of that action. Of course the problem is now where you kind of know where the action is finished and the reaction starts and so on. But basically the action is followed by a reaction, or here very clearly the action is followed by a reaction here. And that also means that the reaction becomes the action for the upward movement. You can basically turn that around. So whenever you have a strong, very strong decline here, you can see that this is basically a 28-30% decline here. And a matter of the time scale is very important for this analysis. This would be basically 8th of November to 12th of November, so about 4 days, and another 4 days you had an equal gain again here if you look at this part, an even stronger gain. And that is, I think, really important to keep in mind when you're basically looking at these charts here. And of course it's crucial to know in what kind of market you're in. If you're in a bull market, in this case actions are going to be stronger than the reactions. If you're here in the bear market, the reactions are going to be stronger generally than the actions, if you want to make that distinction in this way. And so because we're basically coming out here of this bear market, we're going to see in general a stronger action than a reaction, and that means we're probably, this is also the reason why I'm saying it's going to go probably down here and not completely down here again, or even further down, because the basic movement of the market is now being transformed into a bull market, or at least a sideways moving market. If there is a better term, let me know. So yeah, I thought this was an interesting insight to share. Let me know what you think, and see you next time. Bye.